Ian Kerr, Chief Executive of Bolero, an organization that I thought I had forgotten for some time now. It was started, Bolero's history goes back to 1998.
Yeah, and before, yeah.
The origins of EDI and in trade finance. And you've been Chief Executive over the last
18 months. 18 months.
Yeah. How's Bolero changed, and where is documentary trade finance today, the way the banks understand trade finance? And I'm asking this question because I have this nagging suspicion that the corporates, the customers of the banks, think of trade very differently today.
Indeed. Okay. I mean, to answer your question, Bolero does have a very long history. It was formed in 1998 as a joint venture between Swift and the TT Club of Maritime Insurers. It actually goes back a little earlier. When I took over the job as CEO 18 months ago, last Christmas I thought I'd tidy up the office, and I found the original feasibility study done by the Swift EDI committee about this connectivity platform for trade, and I blew the dust off it. It was fascinating reading, and this was the vision. It was all about bringing together sellers, buyers, their respective financial institutions, other involved parties in trade in a trusted connectivity platform. And that's where the idea of Bolero was born. I think back in those days it was ahead of its time. The world just wasn't quite ready. The world of trade is probably the last bastion of paper processing and manual intervention that needs to be conquered in terms of financial services. And back in that initiation of the company, it was just a bit too early. Then the internet bubble burst. But what's actually happened in the intervening time is I think basically all of us are more comfortable with the technology, the way we conduct our own personal lives, internet shopping, e-commerce, everything to do with payments and other areas of financial services are all based on electronic channels. Right. So basically it's about trust, and the trust is now there for all involved parties.
So what is Bolero today?
What Bolero is still with that connectivity platform. Our mission is on a hosted software as a service platform to bring together those buyers and sellers and all the other involved parties.
So historically you started as being a bank membership type organization, and today you're saying that you're a platform providing the corporate client with the ability to connect with whichever bank they want to.
Indeed. I mean, the pedigree of the company really started off in the early days, and still a very big part of our business is multi-bank trade finance. So basically for large corporations who are running credit lines all around the world, who by necessity require to have access to multiple banks in different locations, we provide that assured connectivity platform that makes all that happen. As an example, I've got a meeting this afternoon with the treasurer of ABB, Peter Gisler, who have done a fantastic job in terms of we've integrated into their back office system. They are very, very clear on the management of their credit lines. We connect them to over 40 banks around the world in the processing of guarantees to support their sales process. So
the thing I'm curious about is how much of this is driven by the corporates and how much of this is onboarded, where the corporates onboard onto a ecosystem that that you've created already. I'm piecing it together because being a bank-owned consortium, providing a multi-bank platform for corporates, so that part of the equation is taken care of. The other part of the equation is for the corporates to decide whatever it is that they want to do with that access. So to what extent is it corporate driven today?
It's all about the corporates, and I think a good example of that is where we've moved on from multi-bank trade finance into the concept of the e-presentation of trade documents. This has been particularly driven over recent years by some of the large commodities organizations and people that we have connected to Bolero at the moment, people like BHP Billiton, Rio Tinto. Clearly these guys have had some pretty challenging times recently with what's been happening in the commodity space. Iron ore was $170 a ton a couple of years ago. It's now 56, I think, is the latest number. That's caused some real consternation. And 5 years ago, the EUCP ratification of the electronic bill of lading was actually made available. And that's actually a key document of title in terms of e-presentation. So the corporate drive, and BHP as an example have been very, very clear about this. They've said that they are going to a totally digitized way of managing their trade and their trade finance operations. So we basically provide that platform where we manage not just the electronic bill of lading as that's raised from the carrier and transferred to the seller, but also bringing together all of those supporting trade documents, so purchase orders, invoices, packing lists, certificates of origin, and our job is to distribute those documents to the right party at the right time to complete the transaction.
Yeah. So it's actually automating what was traditionally the trade documentary credit.
Automating a manual process, but the benefit is it's all about the business case is actually a very significant one. First of all, by doing that, by connecting all the parties, let's say it's an LC settled trade. So that's seller, buyer, and issuing bank, advising bank, and carrier, and other involved parties. That transaction can be completed in a day or two. If you are going through conventional manual processes and sending paper around the world through couriers, that can be 20 or 30 days. If we're talking about a consignment of iron ore sailing from Port Hedland in Western Australia to Shanghai in China, that voyage takes 8 to 10 days. So there can be a discrepancy in terms of the vessel arrival and the completion of the paperwork. If we can actually complete that paperwork in 2 days, then that means the transaction can be recognized.
And if you take the profile of an ABB, how much of their business, trade business, is carried out through documentary trade credit, and what are new evolving platforms that they might be using? I'm sure that they provide multiple, or they have to engage in multiple platforms for.
Indeed, I mean, absolutely, and it's about having the right blend and the right solutions to support various areas of their business.
But if they had their way, how do you think they would evolve? Is documentary credit going to be an essential part of trade for a long time?
I think it is. I mean, if you look what they're selling, basically they're into high value capital goods for power generation, large scale infrastructure projects. One of the things that is happening on planet Earth right now, I know it's been tough times in commodities, but there's actually a very big increase in investment in infrastructure projects. And typically these are complex multi-year situations which need to be backed by bank and performance guarantees. So before they can actually sell, they need to have these bank guarantees in place. So that actually is a very, very fundamental part of their business development. And having that capability on a global basis to manage that through the right local institutions or through the global institutions as they need to, depending on the particular requirement, is absolutely key to their business as well. At the same time as other payment streams along open account they are also engaged in. But that's what we're delivering for them right now, and it's actually, I think a very good example of what can be achieved through digitization, and particularly as we've integrated straight into their back office. There's no manual intervention. It's all linked into their treasury system, so it's all about visibility, reporting, and very sharp management of credit lines.
All that information flow through your networks. What are banks doing with that information, and what are you able to do? Are you just a broker of that information, or are you just a central counterparty, agnostic on either side, or are there things that you can do to add value to the information flow that?
There are and there aren't. I think Bolero has a number of fundamental components. First of all, we are a daughter of Swift. We inherited their technical DNA around messaging and authentication. So we provide that assurance, that confidence in the transaction, which is good for the corporates. It's good for the banks. We can work with a wide variety of different data streams and document types, both structured data and non-structured data. We have a matching engine which can help with matching and compliance. Two key things in what we do in Bolero is we have a title registry which actually manages the workflows around the transition of title as a transaction is completed. And finally, outside of Bolero, everybody that enrolls signs up to a rulebook. Now, this is quite important because we authenticate people as they sign up. It doesn't just govern their roles and responsibilities in how they interact with Bolero, but also the legal compliance of that transaction. So that actually adds some value as well. In terms of what we can do with the data, it is about connectivity. It's a bit like the postman's not necessarily allowed to look in the envelope in terms of reading the contents of the check, so you've got to be careful around that. But clearly we can provide information around transaction flows and messaging, which actually can be very useful.
Do you do that right now?
We do. It's one of the areas we're actually looking at enriching right now. We're actually engaged in the development of a product roadmap into the future, and looking at how we can capitalize on those core components of Bolero and actually repackage them into a way which actually maps onto where the business is going.
Does the Bolero model benefit the small bank more than it does the big bank with a lot of distribution network, with a distribution network of its own?
I think we've got a wide variety of banks. If you look what's happened in recent years, we have some of the world's largest trade banks on our platform, and they've been there for many years.
And they're motivated to be on it for the reasons of?
I think a number of reasons, basically responding to their customer requirements, actually being flexible, being able to manage the processing of these instructions electronically. But more recently, we've actually taken on some smaller banks. India has been a very big focus of our attention recently. We've now got 5 Indian banks who've now enrolled in Bolero. We see a lot of opportunity over there. And that is really focused around initially the domestic business, so effectively issuers of LCs for importers. What we're now seeing over there is this is a key transition in terms of the ecosystem. Certainly happening in China is organizations that we've onboarded as importers now taking advantage of the e-presentation capabilities and those business case benefits as exporters in their own right. And we're seeing that move into the Indian market as well, and that's all supported by the local banks. So the ecosystem is growing. So I think now isn't the time, back to your original question, where the vision that was set in place back in the mid-1990s is now ready to be finally realized.
Where did Bolero lose its way? When I looked last at your members or your users profile, you had a lot of Japanese shipping companies, strangely enough, and then you had the odd corporate at either end of the transaction. You are more a proof of concept rather than a viable business.
And in terms of how it lost its way, I think a number of things were not put together in terms of the right growth components, and that's one of the things that we've been working very hard to put right. First of all, if you're growing a digitized ecosystem, you've got to have a proposition and a business case and a commercial model that makes sense to all parties. Otherwise, it's not going to be sustainable. There can't be clear winners and clear losers. It's got to be a balanced commercial model around a business case. And I, on a personal level, am very obsessed around that. So we've been looking at that commercial model as well. We've also got to fix the issues around connectivity, so making it very easy for us to do business with. So as an example, more that we can integrate into the corporate's environment, into ERP systems, into the bank's own back office systems. That will actually remove some of those barriers which were a problem earlier in terms of the growth and the early days of Bolero. And I think also managing those relationships as well. We're a service provider. We need to work particularly with the banks alongside their trade, product and sales teams to position what the offering can do in terms of their reach into their customer base, the flexibility and their responsiveness to their customer needs. And we're starting to see that happen. We're seeing now where banks are actually introducing us to their corporate clients. Some banks are actually white labeling the Bolero solution so they can reach into certain sectors of their corporate community. We work alongside them in terms of RFPs for trade business where we can be the selected connectivity solution. So we are starting to see that change. And I think in the previous days that wasn't appreciated as well as it might have been.
So would I be right to say that as long as documentary credit has a role, then Bolero will be relevant, and that banks are listening to their corporates as long as corporates are still using.
Yes, they are. I think it's not just about documentary credits. That's still a very important part of business. I know if you look at world trade of 20 trillion, the actual amount that's actually settled through documentary credits has remained reasonably static around about sort of 3.5, 4 trillion over the last few years. Certainly what we're doing in e-presentation is just as valid in an open account environment as it is in an LC settled.
How much of your volume is e-presentment rather than documentary credit?
An increasing number. I mean, if you look at some recent, but actually a bit more than that. So if you look at recent transactions that we've just supported, Cargill is a recent company that we've been doing some work with. And their recent, we did some press releases around a sugar transaction. The first one under an electronic bill of lading under full EUCP guidelines. That was an open account transaction. We just did for them a grain transaction from Argentina to Malaysia. 15 electronic bills of lading, that was all done under open account. So I think it varies. There's a lot of discussion here this week about where LCs fit, where open account fit, where is there a role for BPO. We are very supportive of that, absolutely. It's a natural extension of an e-presentation environment. If you're working with documents and understanding and interacting with the data, BPO in terms of confirming the receivable, confirming the payable, is a natural extension of that. And I think the world is waiting to see where that might find its home.
Ian Kerr, thank you very much for updating us with where Bolero is, where trade finance is, and whether banks are actually listening to their corporate clients. Thank you.
My pleasure.